Hi everyone and welcome back to the channel. Now with Storm Amy kicking off, I thought this would be a great opportunity to film another portfolio update for you. This portfolio isn't my own, this is one that I've created for my daughter. It's one that I created just over a year ago and I've been doing consistent monthly updates ever since. For any new viewers, this is a portfolio I created to add small consistent contributions to slowly build wealth for my daughter. And I've done this by adding money into a FTSE All-World Index Fund. I'll cover the fund in more detail shortly, but this series was all about showing how small consistent contributions can compound over time, showing that you don't need any sort of crazy income to benefit from investing. If you saw last month's video, then you'll know I did a full comparison comparing the performance of my 1-year returns versus that of a simple cash savings account. The results were pretty interesting, so if you haven't seen that one yet, maybe click on that after this video. Now the markets recently have been on a little bit of a rally, so it'll be interesting to see how September ended and also how October's going so far. As always, I'll cover the full portfolio value, any recent contributions I've made, and also some of the performance. So let's jump in and see how things have been moving. Okay, so jumping straight into this portfolio here, you can see straight away that we've got a little over £2,000 in here at £2,143.20. And you can also see that 100% of the weighting is in this one global all-cap index fund, which I mentioned earlier. Wanted a really simple investing approach because this isn't an account that I want to check regularly. It's one where I want to just invest month after month and gain that compounding effect and have a portfolio that's diversified enough that I haven't got to manually change anything at any point. So yeah, hell of a lot of stocks within this fund. It's also an accumulation fund, which you'll see here. Ultimately, that means that any dividends that would have been paid out are actually automatically reinvested in the background, so creates that really nice hands-off approach. Don't really have to manage this too much, simply add the money in each month and hopefully watch it grow, which it has been. So the total amount that we've put in, so my partner and I, between us, is £1,907.56, and we've gained around £235 there. Now, if I dive into the performance tab, this is where we can start to break down exactly where these gains have come from. So, we can see our rate of return is 20.71%, which I've been investing in this account for a year and a month. So 1 year, 1 month, so not much time at all. You can even see on this graph, it was back on the 7th of September. Around £500 went in, and that gave us that start within this account. Now since then, my partner and I have added £60 a month. That's not £60 each, that's combined, so not a huge amount, I don't think. That's where you can see these sort of gradual increases of the value in this account as time goes on. We had a bit of a jump around December. We got some money for my daughter from friends and family again at Christmas, which would explain that slight jump up, so we decided to invest all of that. And again, you'll see a small jump here, which I'll cover shortly, which was around the time of her birthday as well. So similar sort of thing. Got a little bit of money for her off of friends and family, so I'll touch upon that shortly. But yeah, ultimately on this graph, you can see we're going in the right direction. Now, if we go into the month tab, let's have a little look at how September ended and also how we got on with October as well. So we can see here for August, so I'll cover August very quickly. That's where you can see we added £255. So £60 of that was from my partner and I, that's our regular contribution. And then we've had £195 going on top of that. For any new viewers, you can see here, you know, April, May, June, July, only that £60 went in. That's kind of our standard of what goes in on the first of every month. And then you can see the performance of the market in the next column. But yeah, covering the last 2 months, £255 went in September. We got a little bit more at the start of September. And then in August, we're back to our standard £60. So picking up where we left off in the last video, we actually gained almost £73 in September, which is huge. Almost our biggest month. I think our biggest month was £76 in 1 month, but yeah, that kind of jumped us from around £145 worth of gains up to around, you know, just shy of £220 as well. And October started well, you know, really well as well. So around £17 worth of gains this month. So like I mentioned, we've had quite a bit of a rally and I guess a market rebound recently, which is great to see in the portfolio. So £234 in the account of total gains, which really happy with. And again, if I go into investments, you can see absolutely everything is in that one global fund. I think there's a couple of pence left over in the cash part, but not too sure, why that is. But like I say, I'm not too bothered about that. It's only a few pence. Now, for any new viewers, what might be interesting for you to see is the Insight tab. So even though we're only invested in one simple fund, the Vanguard platform lets us see, okay, well, I've got this one fund, but exactly, what portion of that money I have, and is going where and where is it split. So being that global fund, it does mean we've got exposure across the board. 67% goes to North America, being the largest economy, and holds a heavy weighting in pretty much every global fund, so no surprise there. Europe at 11%, Asia Pacific at 11%, then after that we've got 4% in the UK, 6% in Japan, and the rest of it's kind of drips and drabs here and there. So that's nice global exposure, which essentially is what we want. We want global diversification within this portfolio. Having that diversification can help you ride out sort of market ups and downs a little bit, and it can be considered a bit less volatile as well to have that diversification from companies all over the globe. That means you're not relying on one sole, market or economy. For example, if we'd invested everything into the FTSE 100, so companies in the UK, and then the UK, economy had some problems or political issues that went on, that would mean, essentially it'd drive all of our investments down. Whereas at least this way, if one market struggles, it may have other markets to help, keep the balance and prop things up. So that's the idea behind the diversification in this particular fund. So moving on to our top 10 investments. So I'm not going to do the maths to work out what 3.8% is of our total amount invested. If you want to do that maths, feel free. But yeah, 3.8% within Apple, followed by Microsoft, Nvidia, Amazon, Google, Meta, which is sort of formerly Facebook, and a few others. Even Tesla's still holding on to the top 10 spot, even though we've seen, Tesla's had a bit of a rough time at the moment. No surprise after seeing that top 10 lineup that technology is our biggest sector within this fund and our exposure, followed by financials, consumer discretionary, industrials, healthcare, etc. So really nice graphic there for anyone who's interested in how these global funds work and want to know a bit more about the inside workings of them. That gives you a really nice little look at that. So that's it for our Junior ISA portfolio update for October. The markets have really rebounded recently, which just shows that sticking within the market and riding out those ups and downs is really worth it in the long term. Now, historically, with my own investments and also this portfolio, autumn and winter seem to be quite favourable. It'll be really interesting to see what happens to the market in this run up to Christmas. If you're new here, feel free to subscribe. I post regular updates on this portfolio, but also my own personal investments. And if you've enjoyed this video, please do give it a like and let me know in the comments how your own investments are going. Thanks so much for watching, and I'll see you in the next one.